Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It is the day of the RBI monetary policy. Now, our central bank has kept rates and its stance constant for quite a while now. Now, in the face of anticipated cuts by the Fed, weak growth outlook from the global economy, and rupee trading at all-time lows, this monetary policy also becomes a little crucial. Good morning, JK. Any expectations from today's monetary policy decision? Are you expecting any change in RBI stance of withdrawal of accommodation?
Hi, good morning, Faraj. Yes, on a day when not much other data is expected, I think RBI monetary policy will be in focus, particularly for Indian investors. And I don't expect any change in the rate, nor do I expect a change in the stance of, withdrawal of liquidity. Uh, you know, India with the growth momentum maintained as per various high frequency indicators, uh, RBI will be more focused on getting inflation back to target of 4%. So they're keeping the policy tight. They're not actually impacting the growth because it is quite high already. Also, their forecast on growth in inflation targets, I don't see a change that is coming about. However, I am interested to see what the central bank says about the recent global turmoil and whether there are indications of a policy response near term, particularly in the context of a Fed, expected to ease at least 2 times this year, starting September, if not three. So those are the things I expect from the RBI, state policy. Rupee, of course, saw a marginal low of 83.9725. This is the third day of high for the USDINR, but offers ahead of 84 from PSU banks were also seen. Now, what we have significant is that hitting new lows for 4 consecutive sessions keeps the buy on dip strategy intact. Particularly, importers would be interested as both spot and forward move higher, and there is a bit of more interest from importers because of earlier assumption that rupee will stay stable, and now both forward and the spot moving is drawing in more buying from the importers on a dip. Besides that, foreign investor outflows was also quite significant yesterday at 600 million, taking the total outflow in the last three sessions to 1.2 billion. As we start the day today in Asia, the sentiment is again slightly subdued, and the short covering or the rebound that we saw in the markets has fizzled out, at least for now. I think market requires some fresh impetus to make a good headway. Whatever the recovery was seen was due to Bank of Japan coming out and talking soothingly about the market, and also saying that the monetary policy won't be touched when there is a market turmoil. So if you look at the Asian markets, they recovered smartly yesterday but gave up part of it today. But if you look at the US market, so they started strongly yesterday, but ended quite a bit on the lower side. So that's actually indication that not only the BOJ policy impact, but also the fears about US slowdown, and also the upcoming elections in the US, where there's a lot of uncertainty about the policy, and the recessionary fears keep the as well as the earnings from companies not so good as expected. So these are keeping the US markets on the subdued side. There is also a perceptual change about AI, where people are questioning the valuation that it is currently commanding. So these are the things that impacting the US market, because talk about the US market because that becomes the benchmark for most of the global indices. On the currencies, yes, the dollar yen jumped as almost to 148 before some retreats. This was helped by Japanese official statements yesterday. There was a recovery in some of the currencies which were oversold due to yen cross unwinding, like Aussie dollar. Again, today they are seen very subdued. On the yields, both the 2-year and 10-year had jumped substantially yesterday. Yes, they had also fallen to substantial lows, and trigger yesterday was poor response to 10-year fresh issuances by the Treasury, which did not receive a good response. But still, 2-year is still trading below 4% mark, and 10-year is also below 3.9%. Focus today will be on the unemployment claims, weekly jobless claims, that is, which came at a 1-year high of 2,49,000 last month, even with the continued climbs also jumping. So whether we see an improvement there or whether it continues to rise, that's very important from the policy perspective, as well as from overall economy direction as well. So we see when the employment in US decreases, that actually goes to affect the consumption, and consumption happens to be a very significant portion of US GDP. So that's where the interest on the labor market report, very important. So finally, for US home buyers, there was a good news yesterday as mortgage rates fell to 6.55% with a recent fall in the yields and also an expectation of Fed rate cuts. To give a perspective, the mortgage rates had hit as high as 7.9% in last October 23. So all in all, slightly subdued market compared to the high volatility that we had seen, but immediate focus is on RBI monetary policy at 10 a.m. Thank you.
Thank you, JK. And when it comes to RBI monetary policy, there is no change in rate or stance expected. RBI will be focused on getting inflation back to 4%, and there's not really any concern with respect to growth in India. Rupee saw a marginal low of 83.9725, hitting new low for the fourth consecutive session, keeping buy on dip strategy alive, especially for the importers. FII outflows have been constant for the past few days, and in the global markets, even the recovery seen yesterday was soon reversed when it comes to Asian market today morning. Dollar JPY jumped to 148, but it's back trading near 146 levels. If from the US, the data to look out for would be the weekly unemployment claims, and the job market weakness has been the attention of the markets for the past few days. So that's a crucial data to look out for. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.